Welcome to the Capital Spreads Weekly Update. Today is Thursday, the 9th of December 2010. And the week so far, well, it's been a relatively quiet week. However, we've had two key themes emerging. The first is that the equity markets continue grinding higher, with the DAX and Dow now having hit yearly highs. And bond prices have now come back into focus, with many people selling bonds quite aggressively. And as a result of that, bond yields have now also hit yearly highs. Now, there's a number of reasons for this. The first is President Obama's agreement to extend the Bush-era tax cuts for another 2 years, which is seen as being very positive and bullish for the US economy, and therefore there's a knock-on effect to the global economy as a result. The second is that we've had a number of economic figures over the last few days which have shown that the global economy might gradually actually be coming out of the recession and moving upwards from here. For example, most recently we had UK job figures which showed that the number of jobs being created in the UK is actually improving. So looking at the situation as it currently stands, the FTSE is trading around 58.11. It's unchanged on the day. However, the FTSE remains in an uptrend. It started back in July 2010, and that trend hasn't actually been broken. I have a chart to show you regarding the FTSE. As can be seen, the FTSE continues grinding higher since July. It could possibly go and try and test the 5902 all-time, or 5902 yearly high, I should say, levels. Considering that both the DAX and Dow have already hit their yearly highs. Beyond that, many people are eyeing the psychological 6,000 level in the FTSE as a target before the year end. Considering both the fact that the FTSE is sitting above the 100-day and the 200-day moving average, and the fact that December typically tends to be quite a bullish and strong month for the equity markets, it certainly looks like both those targets could possibly be possible. Eurodollar is currently trading around 132.20. It continues in a downtrend. It started back in November 2010. Now, the downtrend was initially started by concerns over Ireland. However, despite Ireland having now been shored up, at least temporarily, there continues to be lingering concerns both over Portugal, and the bigger concern is Spain, as I've mentioned in one of my commentaries before. I have a chart to show you regarding the Eurodollar as well. As can be seen, Euro continues trading lower, and it certainly looks like it could go to a low of 127.50, and below that possibly even 120.00. Just recently, the IMF have also come into the Eurozone concern situation, and have stated that they want the Eurozone countries to do more to tackle the credit and the debt crisis that is occurring in the Eurozone countries. Gold is currently trading around 1385. It hit a all-time high of 1431 just 2 days ago and has bounced off that level since. Now, gold has been rallying off the uncertainty both over the Eurozone countries, as well as the negative sentiment we had just towards the end of last week in the global economic outlook. It has consequently come off of the back of that, partly off the more positive outlook in the global economy, as well as the rising bond yields, which have made bonds more attractive relative to gold, and many people have been buying those instead of gold. I have a chart to show you regarding gold as well. As can be seen, gold continues to remain in an uptrend, and if it continues at its current level, it could certainly try and test the 1431 level again. Beyond that, many people are possibly looking at a $1,500 target in gold if it continues going on its uptrend, and that certainly looks like it will be the case, at least in the short term. Oil also has hit a year high. It hit a high of 90.73 just a few days ago. It bounced off that level. It's currently trading around 88.62. Now, oil tends to reflect quite strongly the global economic sentiment and the global economic outlook, and it looks like the economic outlook is very positive, and gold tends to reflect that. Oil, I should say, tends to reflect that. If it continues at this current pace, we could certainly see oil going back up to around $100. However, you have to also keep in mind that oil is trading between the $80 and $90 range, and it's a range that it has been trading for the last few months or so. So if anything, if you were to buy this, you'd have to buy it with caution, and if you were to sell this, it would certainly be wise to keep relatively tight stops in mind, just in case it does pop through and try and test the $100 level. In terms of the week going forward, we don't have many key figures of the next week or so. However, there are a couple to possibly keep in mind. The first is the US trade balance coming out tomorrow, as well as the University of Michigan sentiment figure tomorrow as well. Later on in the week, on Tuesday next week, you've got the UK CPI figures coming out, as well as the US advanced retail sales figures. Now, all those figures will give a further hint on whether the the global economic outlook is actually improving, both in terms of consumer sentiment as well as consumer demand. Now, if that is the case, it will provide further impetus for the markets to continue going higher, and will give further argument to the bulls who argue that we are through the worst of the crisis at the moment. in terms of client activity, many of our clients continue to fade the market moves we've had over the last few days or so. So they are selling the DAX, the Dow and the S&P, believing that the market moves have actually in the short term been overdone. They continue to hold long positions in both gold as well as silver, positions that they've held for a very long period of time, and that certainly hasn't changed. And just recently they've built up a new position of being long sterling euro. In terms of a theme of the week, I would say the theme of the week is the change in market sentiment to be very positive of the last few days or so, which is being fueled by both a mixture of political news as well as economic data. Now, it's too early to say we're through the worst of the situation. However, it has to be kept in mind everything does seem to be looking like we're heading towards an improvement going into 2011. However, it has to also be kept in mind that December typically tends to be quite a bullish month for equities, and there could be an element of window dressing which is helping boost the equity markets more than they would do in other situations. As usual, that's it for now. If you have any feedback, it's media@capitalspreads.com.